Hello there, everyone. Hope you're doing well. Good to see you all. Just had a massive thunderstorm. Oh, mate. There's no signs of thunderstorms here. It's supposed to be that they've said on the news it's supposed to be the hottest day of the year today, and yeah, to be fair, I'd believe it. I really would. It's yeah, I mean it's mega. It really is bloody roasting. But yeah, it's nice because obviously we're off to Romania on very early on Friday morning. And as far as the weather forecasts are concerned, there it's mid 30s to low 40s for the entirety of our stay. So it's actually quite nice because we've had such a crap summer so far. We're going to be here for a few days of really hot weather to acclimatise to it before we go travelling off to Romania with the kids. So hopefully we should all be in a bit of a better state. Now, I remember last year when we flew over to and do our road trip across Croatia. I mean, we left in the same time. This is our big family holiday. And when we left, it was about 18 or 19 degrees. When we landed, it was 38. And that was difficult with the children because it was, yeah, it was extremely hot. I mean, it really, really was very, very warm. They all did quite well, to be honest. I mean, they're quite for children. They're very well travelled, but yeah, it can be a bit difficult for the kids, and to be honest, for us as well, for adults as well. All right, so let's get rocking and rolling. Hey, hey Matthew, yeah, good to see you, mate. So last week, guys, it was how do I say? I mean, it was really good. Performance was absolutely outstanding. Definitely, I think, on reflection, was struggling with a bit of tunnel vision myself. I know we've just been having a big conversation about that subject in the Traders Lounge. But ultimately, yes, it was. I think on reflection, if I'm being really critical of myself, I probably struggled with some tunnel vision last week and kind of keeping my eyeball on such a laser focused area. And only one area at a time, it felt like I was really kind of dragging my heels, especially with the pullback sort of strategy that we put in place at the beginning of the week, trading the yen crosses and looking for those corrective positions of which we were losing and winning, losing and winning and losing and winning. Now, it's really interesting, obviously, because, well, frankly, I've been doing this so many bloody years now. It is still second nature, but equally, those kind of impacts to your mind never really sort of let up. They, I mean, they do from time to time, but it's always something to contend with, right? It's what you do about it that really makes the difference. In the end of the day, we continued pushing on. I mean, and just continued planning the trades and trading the plans and continued on throughout the week. I mean, last week was arguably one of the best single weeks that we've had in the fund's history. I didn't really make a big deal out of that in itself, but it was 8 what was it? 8.76%, was it? I can't even remember now. I can't even remember. I posted it in the room. I think it was about 8.46 or something, or 8.76%. It's the thought's gone from me now. But anyway, it was really good. It was brilliant, absolutely brilliant week. I mean, 35 trades. We had 14 losers in amongst those 35. So not a bad win-loss ratio, about 62.5%, maybe probably a 63% win-loss ratio at the end of it with the gold and the Brent positions that both hit target. Well, one was later on Friday and then another one this morning hit target. Gold hit target this morning. So it was pretty damn good going. I mean, it was full on, wasn't it? I mean, it was a really, really full on week. And hopefully I really want to have a big push. But I also equally am, I don't want to go and be brazen with the trade ideas. Now, obviously, I let out a signal this morning. That was in the DAX. Did a nice little positioned the DAX this morning for 0.52%. That was trading a bounce, sort of a buy-in area here, buy-in option that I was looking at this morning with Michael and the rest of you. I mean, whoever was online at that time. And that was this little one here. So that was quite nice. Pretty decent execution on this one. This zone was drawn in after the fact, obviously, executed the trade. We had this dip down, came pretty close to stop loss here, tanked back, got this break close retest, drew in the zone, continue trading higher. This was the next liquidity zone as well above here as well that I was eyeballing. So that's that one in there. So then we got the breakout above this one, double retest, and then from that point on, it was pretty clear it was going to be a target. As soon as we broke structure in this area, it was definitely clear that it was going to continue the rally, because it was the sort of the second attempt at the bounce, and I just assumed it was going to be this was going to be the loser or the winning leg. So really nice little trade there, 1 to 2.2, 0.52 return on that one. So that's basically my European session. Yeah, that's literally it. I didn't do anything else. I mean, this initial move down in the DAX here this morning was actually really, really nice. Breaker structure 1, breaker structure 2, breaker structure 3. I mean, 3 individual trade ideas that were all pretty damn good. I mean, there's no reason why, there's kind of no excuse why I wouldn't have taken any of these trades. They were all really nice all the way down here. Possibly would have been a little bit, possibly would have been a bit spicy at this one, because that was an inflection point for price action. We've come down here, obviously we've bottomed out, we've had that bounce back here, so possibly would have been a little bit spicy taking trades around this area here, but we did get the BCR breaker structure at that point there, and then essentially that's the exact same trade short as we took long here. So that wasn't too bad at all, and that honestly, that is the European session this morning done for me. So now it's all about the afternoon and looking at where we could possibly go. Now it is Monday, as we all know. It's a bit of a temperamental environment out there. I think most of the dust is blown over from last week's craziness. We did see almost every kind of market cycle that you could imagine in the space of 1 week. We had, arguably, if we look at something like the AJ or something, on the daily time frame, it was almost looking like flash crash territory. I mean, this was it's insane. Not exactly flash crash, but major chain liquidation, and we saw this across most of the assets. The FX space was hit. Commodities were a little bit more resilient, I must admit. But the US stock markets as well, they were absolutely crushed as well, especially the NAS 100 here. Last week was a really, really big loss for the NAS 100. Beautiful buybacks still continue to take in place, so I'm really glad we got those calls in at the beginning of the week, basically out there saying, this is a really good time to buy, just start loading up, long-term buy and holds if that's your gig. It doesn't really make a difference. For us, it's day trading them, but longs are still going to be the general bias unless we're trading into an area like we are today, which I'm going to discuss in a moment. But that was generally the plan based on Monday, and then we kind of saw it through. But then by Wednesday, of course, we had the stagnation. So we had a lot of price bounces or a lot of price continuations with the trends that we'd seen recently. Wednesday, we saw a lot of stagnation. Things really sort of taking a step back from where they had previously been in terms of the trading volumes and the kind of momentum that we had been previously looking at. And let's be honest, it wasn't plain sailing, was it? I mean, we took, I remember at the beginning of the week, I'd already been executed about 9 trades, and that was just in the yen crosses, really. And it was win-loss territory every time. It was take a trade, it was a loss, second attempt, win, loss, second attempt, win, loss, second attempt, win. And it just kind of, that theme almost continued on, even in the stocks as well. But it just goes to show, and I kind of want to bring it around to a point here, and back to the point that I was talking about with Michael and Matthew in the lounge, is that at the end of the day, you can be so wrapped up in each individual trade and thinking, oh man, geez, this is going really poor. I'm down 0.5% or I'm down 1% or whatever. But the bottom line is, guys, the way we're trading, we could lose a shitload of those kinds of trades constantly, and then have 4 good winners and overdo every single loss. And then at the end of the week, even though I genuinely felt like it was a bit of a slog, it was quite hard work, at the end of that week, we're up 8 point whatever percent. And, you know, that's when it really comes around to thinking, actually, why was I ever concerned? Why was I wasting my time being concerned about things like that? Yeah, sorry guys. Do you know what I was doing right then? I was putting eye drop in my eye. I thought I was going to have the skills to be able to talk and put an eye drop in at the same time, but ultimately no. It was too much hard work. But yeah, so overall, really good week. You know, my top advice is don't try and talk and do an eye drop at the same time. And that's basically the best thing I've got for you all. So I hope you take that away. Appreciate it. So, yeah, that's what the missus would say. Looking at the rest of these at the moment then, what's going on this week? Well, first of all, before we get into the actual markets as well, because obviously time is limited, what are the holiday plans? Now, obviously, I would generally do this on the day before we leave, but I want everyone to be absolutely aware of what the plan is. So, the plan of attack whilst I'm away is I am going to be taking a workstation, remote workstation with me, and I have the capacity to be able to shoot videos and then upload into the room, sort of as and when I please. Now, based on the proviso, we have solid internet, which this villa apparently does. I remember the villa that we had in Croatia said it was solid internet, but frankly, it was a bit on the slow side. But this place seems to have pretty good stuff. I know that because there was loads of stuff about the games consoles and stuff, and so I imagine I imagine the internet's got to be pretty good. Yeah, I know. Yeah, but I know I get that, but you know, we're a new business. Well, we're not. Us guys aren't new. And I'm not new on my own, like per se, but this is a new business, so I got to keep it going. It's the early days. It's a startup. That's what you got to do, man. Startup environment. So yeah, just leave me alone. That's what's happening. So there is going to be a skeleton service. So you don't need to worry or think, what the hell am I going to do for a couple of weeks without Max? Because of course I know what it's like. You know, your local Max goes away and it's, you know, shit hits the fan, doesn't it? So don't worry. You're going to have, you know, you're not going to have 40 minutes to 1 hour sessions like you have been getting recently. It's going to be, you know, sort of 20-minute pre-market setups for the stock markets, and that's going to be your lot. So I'm going to make sure that you guys are ready to go in the stock, so that you're earning money consistently on a daily basis. And that's going to be it with the introduction of a couple of trade ideas throughout the day whenever I'm there. But I mean, it's going to be pretty chill. Look, it's going to be pretty chill. I'm here. I'm going to be somewhere else, but yeah, there's going to be some level of service. So that's that. Now we can focus on this week, of which I really want to smash the week apart again and get a crazy week. Max on the beach with his laptop like a proper YouTuber. Yeah. Yeah. Nah. Yeah, it's not. Don't worry. I'm not going to be on camera, flashing my 50s, mate. No. That's not me. No 50s. I'll be flashing my. What will I be flashing? I won't be flashing anything exciting, so don't get ahead of yourselves. Right, so let's have a look at what's been going on then. First and foremost, oil looking absolutely insane at the moment. Now, we've broken and closed above major areas of liquidity down here. We had a nice fake out, failed retest, We've got a really, really nice bounce back. We've taken a couple of very small intraday trades along the run so far. But even after this trade idea is closed, we've now got a really nice 15-minute BCR. Now, I think the daily time frame is going to be coming back on itself soon enough. It needs to, right? It needs to take a rest. But if we look at this daily, let me just drag this out so I've got better screen. There we go. Yeah. So if we look at this daily time frame, I think we could be at the beginning of a really nice run here. And this daily, I mean, we've been looking at this for a while, right? We've covered this kind of stuff. We've got this descending level in here. We've got an ascending level rising up through the lows there. I think this could be going up for a really nice run. I think over the course of the next maybe, I don't know, 14 days, let's say we could be looking at oil back up at around 87.50. Maybe not 14, maybe a little bit more. I'm not sure. I'm not sure about the price time ratio at the moment, but I am pretty damn sure that we're going to go for a nice run in oil. So I want to be prepared for this. Now, if we look at the daily level of liquidities, let's completely ignore the 15-minute here, right? We've got this level in here. We drag this level across. That's where the daily is trading in right at the moment. The price line is directly inside liquidity. Now, this is a relatively cash-rich area. It's not the cash-rich area. And in fact, there's a lot of guys out there on the stock exchanges that would consider something like this a neutral area, in fact, because we've had one wave to point B and then another wave to point C here, and we haven't really seen too much inflection. However, if we look at this point here, we actually rallied back quite significantly so as soon as hitting this level. And if we look even further back in the past, we start to see a bit of a picture building here because we've rallied up to this point, really big sell-off. Up again, big sell-off. Then we had this fake out with no retest, and then we finally break above consistently. We get one retest, we get two retests, and then we get the third and up and away. So now we see that actually this is probably worth paying attention to. So my plan for this is probably to wait a couple of days and to see where this asset goes. If we come up to, say, this area in here, then we start to pull back. Then I'm going to be waiting to buy back into it to ride the rest of the run up to the highs here. This point, of which I've drawn the top of the path here, that point there, that's my expectation, but we can't trade that yet because we're not fully clear of liquidity. I want to see today's candle close to find out where the real meat of the week is going to be sitting, and that is tomorrow, Tuesday through Thursday. So we've got this area in here. We want to be waiting for the breakout of this area, and then we can get up and away. So we can see this on the 15-minute time frame here. We can see this on the 15-minute time frame here. So we've had this break close in this sort of retest area of this 15-minute liquidity, but in actual fact, this is probably more so an instantaneous drop-off as institutional players were removing positions, forcing the market down, and then buying back in to continue. So the rest of the institutionals are still in here. They're still they're still controlling the market at the end of the day, but there would have been a big player at this point in here. They would have been taking profit. Markets come down, and then the trend continues. The move continues upwards. So that's my plan. Wait for the breakout in oil, and then we're going to be looking to trade the continuation between these two margins. We're also going to be looking to trade the rejection between these two margins, and then we're going to be going up and away from there. So what I hope to achieve is some really significant risk-reward returns around here. Probably looking, I don't know, possibly at a 1 to 4, maybe a 1 to 3.5 as a bit of a longer term, maybe a 1 to 2.8 to a 1 to 3.2 from the top. The reason the risk reward being lower at the top here is because I imagine the price action is probably going to be a bit different once we reach up there, but I am really going deep on the speculation here. I mean, it is speculation at the end of the day, and regardless of what you think about my calls or don't think about my calls, they are wrong a lot of the time. So we're just going to have to wait and see what pans out. But I'm hoping to probably do about 1.5 to 2% gains between these two margins over the sum of the time it takes for the market to trade in between them. Okay, so let's move over to gold then. So gold just this morning hit our target. That was nice to see. There were a couple of hairy moments. Thought we might be going for it down here, but obviously we never broke below liquidity there, so that was absolutely fine. We did have this event here as well, which is at 2:30 on the Friday, of which I thought we might be in a little bit of a spot of trouble at one point in time because of some news that I'd heard of, but there wasn't any real reason for worry at all, to be honest with you. It is what it is. Now that we're trading back up at around 24.44, this is a relatively okay point of liquidity. I never marked this out as a big one, but it was just the realistic point for a target profit. I did not want to take the trade up to this area in here, as I thought that was too optimistic from where we were trading originally. That's the sort of premise for the trade idea. However, now that we are trading up here, there are a couple of fresh trade ideas that we can now be looking at. So let's delete that. It's old news. Frankly, we can delete that one in oil as well. That's old news. So looking at this gold chart at the moment, I would be looking at potential shorts and longs. So sell side and buy side options on both sides of the market here. We've got this point here, which is the next zone up. Quite nice. Good trading margin. I'd be looking for a 15-minute breakout retest of this area at 24.48. And then the continuation up to 24.57. Impossible to indicate what the exact risk reward would be at the moment, of course, as always, but we're probably looking at around a 1 to 1.8. That's what I'd imagine. Because by the time the market breaks up, comes back down to retest, we form the retest low, and then we zone the retest low, and then we have our stop loss somewhere, a nice margin below that. Maybe a 1 to 2, I don't know. But that's the trade idea that I've got long for gold. Now, I've already lined up the short for gold, and that's going to be based on just a simple break of structure below these lows. So that's in this area here. Don't worry about this too much. It is a point of liquidity, but it's freshly made, doesn't have any history. So what I'd be looking at is a break of structure trade down here. I'd be looking at a target profit of this area here, and my stop loss would be around the 50% point, maybe the sort of 35% point down from that level of liquidity above, leading to a 1 to 2.61, which is a really fantastic risk reward. Obviously, the trade yields more, the short, but we can't force what's going to happen. So that's the long, that's the short. The long, unfortunately, cannot be a pending order yet. But, obviously we have the BCR factor. When the market comes down to this area, whatever that time looks like, you can then set the pending order. So you can set the pending order wherever your break of structure point may be, and then you're ready to go. But you have to wait for the market to break out first, as I hope you guys, by this time, you know that. The short, however, pending order, put it in, walk away. You don't need to think about it. Set and forget trade. Just literally ping it in, you walk away. That's all that's required. So, couple of opportunities around here as well in the FX space. Now, again, it is Monday. I know historically I probably like to set things up on a Tuesday a little bit more, really, because more things have happened and the market's settled on the Monday. But this Aussie CAD, for example, is looking really tasty. This is a spicy chart. We've got this area in here, really nice big rejection down to this low, liquidity point being there as well at around 90.15. We've made it all the way back up again, back up to the liquidity zone, and we're looking pretty damn tired. Market's really gradually working its way up inside here at the moment. Ideally, I would like to see more of a push into the liquidity to fill up on the pending orders that are going to be sat around here. Make no mistake, there will be money between 90.65 and this area down here at around 90.60. I want the market to come back up there because the more shorts that we can build up on, the more likely we're going to see our TPs reached. So I'm not going to sort of get ahead of myself and get excited and think, if we break structure now, I'm going to take the trade. I really am waiting for the market to come back up into this area. So let's say, for example, specifically this area in here needs to be hit before a trade can be taken. And then I'm going to be looking for the break of structure point, which at this moment in time seems to be about there. It's not perfect, but because we've got this kind of inverse flag, it's making things a little bit difficult. I mean, we've definitely got a liquidity zone here. That's without a shadow of a doubt. It's super clean, super simple. So I guess what we could say is, just to be really safe and not take any of the profit away from our risk reward ratios, is execute a breaker structured trade there, have the TP sort of here at the floor. So let's say, for example, our liquidity zone down here is going to be the big one. That's there. Target profit's going to be on top of the roof, and the stop loss is going to be about where it is right now, frankly. So that's around a 1 to 2.35. That looks like a pretty solid trade idea. Now, you may have seen, just from my price line then, we have a risk profile factor to consider, and that's this area in here. I'm not overly concerned about this because, frankly, we've made it through once, we've made it through twice, we've made it through thrice, and it's been absolutely fine every time. The only thing it's actually done is caused a break close retest point before continuing on its given way. So I'm not too concerned about that based on recent previous price actions. So that's why I'm all game for this one. This one again, guys, can be a pending order. Lock it in, mark it. You've got set and forget style trade here. There is no reason to think about anything else going on. Okay, so just a set and forget trade. But you do, I guess the pending order will be on the premise that we reach this area first. That's going to be the crux of it. Okay, so pending order the trade only after we reach this area. So this is actually really easy for you guys to manage. All you need to do is you need to go into here. You need to set an alarm. Set an alarm in the AC there. Once the AC hits, then instantly go to your MetaTrader, plug in your pending order, and walk away. That's it. You're all good. And so let's continue. Aussie yen at major liquidity. I don't want to get in the habit of making all these Aussie trades again. They've not been too bad for us over the last last few weeks, I suppose. They've not been too bad, but I don't want to make a habit out of it. So, I mean, look, the trading opportunity's there. It's there. So we've got the trading opportunity. It's almost the same as the AC. Arguably, it looks even cleaner. So you do have that to work with. It's actually pushed even deeper into liquidity. The only downside risk to this is the fact that we have it as a yen cross. That's the only downside. Yen at the moment is high risk. It's been high risk for months. Right now, it's probably higher risk than it ever has been. After what's been happening recently, it's pretty touch and go. So you have to consider that one. The long is going to be back up to this area. Now, I don't want to trade the Aussie CAD long, but you have the Aussie yen long. Now, that's going to be a 15-minute BCR continuation. This is no small trade. This is quite large. Okay, these trading margins are not exactly that tight. So full break close retest to this area, target profit at the belly of the zone above, stop loss down here at around 97.17. You got yourself a 1 to 2 risk. So that's not too bad either. And the one down below is going to easily be a 1 to 2 as well. I'm not even going to print that in. I'm not even going to print that in. So pending order, that's going to be down at this area in here. Target profit, stop loss. Probably going to see a better risk reward ratio in this trade than you will that one. In fact, yeah, I'll probably have that there. Yeah, I am going to print that one out just to see, because I don't reckon that is going to be that good actually. Yeah, I can't. Oh well, actually, wait. Oh yeah, no. What am I doing? That's rubbish. Yeah, so that's going to be it. Yeah, that's going to be it. Yeah, so you've got a better risk reward ratio on the one above. Yeah, definitely. There's no way about it. I'm not cutting the stop loss down anymore. That's where it stays. That's definitely the entry. I'm not having it anywhere else. That's going to be, in fact, the TP's even higher than that. So 1 to 1.88. So that's the trade idea. Trade idea short, trade idea long in the Aussie yen. So no, not in the Aussie NZD, not in the Aussie dollar. Oh, CAD Swiss. I don't think so. No. I don't think so at the moment on this one. That's definitely a nice point there, no doubt about it. But where would we trade to? I'm not going to take the trade to there. It's too tight a margin, and that's a big level of liquidity. So I'd have to clear that first. Possible trade down to this area in here, but we're far away from that at the moment, so there's no point marking this out. If we traded long, we've got this level of liquidity directly above price. I mean, that's 63.46. We're trading at 63.30. It's about 16 pips. So trading margin is too tight in the CAD Swiss. I'm not going to touch that one right now. Euro yen. I mean, this looks pretty spicy as well. Yeah, this looks pretty spicy. We've got high 1, high 2, high 3. We're now trading up against this area again. Now, of course, if we get a break close and a retest on top, then we're going to be looking to take the trade back up to around 162.20. If we get a rejection of this one, then we're easily going to make it back down to 160.50. I mean, this is a spicy looking chart. Yeah, so this area in here, first and foremost, point of liquidity to take the trade to. So let's just map this out quickly because these highs and lows can be a little bit confusing. So I'd probably be looking at this area here as my area for the trade. So this becomes my trading margin. Now, in terms of the breaker structure, we don't really have any clear indication. This area, this floor here looks pretty good, but I would want more confirmation than that. So we have this area here, then we have the double retest, and then the continuation. So that would be my breaker structure point in there. So then our trading margin officially is between this area here as a breaker structure point, no BCR required. Target profit down at around 160.40. And the stop loss at this area in here. And that, ladies and gentlemen, actually makes it 1 to 2.6. So that's not bad at all. Now the long for this one is pretty simple. It's a 15-minute BCR. Target profit for this euro yen is going to be at this area in here. That's your trading margin long. BCR continuation. Now with the BCR included, you're probably not going to get a great risk reward out of this one. It's going to be okay, but not the best. So if we bring that up to the 2% point, if we bring that up to the midpoint, the 50% point between A and B, we've got a 1 to 1.64. So that is really on the cusp of what we would be looking to achieve from a trade. Not to say that we can't take it. And we also don't know yet exactly what the BCR is going to look like. If it comes down to this point here, then we draw the zone in. Your entry point could be lower, leading to a 1 to 2 at best. But we can't say that at the moment. Realistically, it's probably going to be a 1 to 1.6. That's what I would think is going to be more likely out of the two. But those are those in the euro yen. That short is fantastic. I'd lock that in the pending order ASAP. The long, again, BCR requirement. No pending order can be placed in the market until we have the retest confirmed. Then you can put your pending order in at the level of the breaker structure. Right, guys, it's actually getting to 10 past 2. So what I'm going to do is I'm going to skip the rest of these and then get onto the stocks, because at this rate I'll be still analysing the FX space by the time the market opens. And then we'll cover off tomorrow from the Euro NZD down and add that to the books for the week. So, first of all, NAS 100. Now, where we are trading today looks like a dog's dinner. Now, you guys all know how much I absolutely love dogs, but let's face it, their dinner looks rank. And this is what this chart looks like. I mean, it's the perfect example. So, looking at where we can trade this at the moment, I mean, your guess is really as good as mine. We've got parallel channels forming at the end of this move. In fact, they're probably not even parallel. No, they're not really. So yeah, I don't even want to do that. We've got liquidity, which is kind of all over the bloody place. I mean, the clearest point... Is that the clearest point? I mean, I have no idea. I really don't. This looks confusing. This is a confusing chart. How far have we travelled from the low? Quite a distance. I mean, we were down at 17.25. We're currently trading at 18.60-ish. What to do? Well, directly above price, we definitely do have a point of liquidity in there. It's relatively neutral in comparison to the end, the top and the tail. Yeah, this looks crap. In all honesty, guys, I am going to give you my professional advice. Sit out of it today. Don't waste your time with the NAS 100 today. Let's look for something that actually makes sense. Oh my god. You're serious, man. What is this? Hey, Scotty D. Good afternoon, buddy. Good to see you. Sorry, mate. I had the chart cover in the chat. Hope you're alright, man. Dow has good short potential if it breaks below the 15-minute anchor. Well, yeah, I mean, yeah, it does. It actually, I tell you what, I should give the stream over to TJ. You know, he is quite right on that. Yeah, actually, yeah, not wrong at all. Because of course, if we have this area in here as a breaker structure point, we have the floor of the market, which is in this area in here. That probably needs to be a little bit of a wider zone, to be honest, but that'll be fine. And so, yeah, we've got this. Now, if we want to be really safe, of course, this is a range of a sort. But if we want to be really safe, then we should be looking to remove this ascending space before we execute a trade. So this is the precision element of just mitigating every potential and likely risk to our trade. So if we have this ascending level in the charts, and then we're looking for that margin below, the margin to trade is going to be below 39,507 and 39,392. On a 1 minute chart, that's probably going to afford us a very healthy risk-reward ratio. How would we work it out though? Where is the true liquidity? So maybe in here? I mean, that's a wide zone as well. We're really cutting it fine here. Yeah, I reckon that's going to be a safe bet for a breaker structure. So once we come down to this area, we crush this low, we crush this breaker structure, and then our trade is going to be taking place in between these areas. So then the trade for the afternoon looks like a breaker structure, very aggressive entry, and then we're going to have the stop loss at whatever point the market forms around here. Now that there, yeah, okay, so let's just study this for a moment, guys. We need to get invested in this. So we've got lots and lots of highs. The market does come above multiple times, has a retest of the top of this area and a continuation, but it still hits this area here and falls back. Okay, we have a major inflection point, another major inflection point, and another as well. So I would say that this is probably the best bet that I'm going to get today at making this work. So if the Dow Jones wants to go short, unfortunately, that is the short. I say unfortunately because, frankly, it's got a hell of a way to go before I'm even going to be interested in it. So let's have a look at TJ's here quick. Yeah, okay, yeah, good man, yeah. We're looking at the same thing. Okay, good stuff. So that's what I would map out for you guys, okay? Just that's what I'm mapping out for the fund. That's what I'm going to take personally if it plays out. Which isn't, I don't believe it's great. It's just not got my full seal of approval of confidence, to be honest. But that is what there is. Let's just check out the longs here quickly. Yeah, because honestly, we've created so much mess here recently. It's very difficult. We've got low there and we've got a high there. right? So I guess if we want to take it long, well, if we want to take it long, you've got a couple of options. I mean, this area in here, for example, is certainly a breaker structure point. You could, however, be the conservative trader. So we've got one aggressive, one conservative. I think I'm going to be conservative. Wait for the market to come right up, clear out all the crap in here. We've also got this area in here in the middle. Okay, and this is getting really annoying now, obviously. It's quite frustrating, isn't it? Because we've got so many zones. So I think looking at this, my long is going to be in the area that has no zones. Okay, because when there's no zones, there's a POLR. So when there's a POLR, we are pleased because there's the more likelihood of the price reaching our given target. So what we could do is we could bring our stops down to a 1 to 2.1 risk reward ratio for over a 0.5% return. And we could include not just the one zone, but actually two zones inside the stop loss. And that's what I would go for. I would always sacrifice the additional bit of profit for the likelihood of the trade's outcome. Always. So we're still looking at a very nice return, which means, I mean, I don't know if you guys managed to get the DAX this morning or if you didn't, but you know, if we did, then that's going to be over 1% return for one day in two trades. I can't ask for any more than that. I'm a happy man. So that's going to be the plan of attack there. If it's short, it's down here. If it's long, it's up there. This is honestly guys, you can put this as a pending order. You don't, just because it's the stock breakout session, you don't have to manually execute it. So you do have that capacity. The space in which the trade, the market's moving in here is the NML. So we don't want to be messing around with anything in the middle of this. This is high risk territory. It wasn't high risk territory, but it certainly is now. Okay. So I am going to wrap things up there, guys. If you don't have any questions, if you do, then please ask away. That's absolutely fine. Happy to stay on and answer them. But if you're clear, you've got a good picture of what needs to be achieved, you've got your pending orders, you've got your market orders, and you're ready to rock and roll and get some more orders on the board, then I wish you the best of luck, and I hope you have a fantastic rest of your day today. I am going to be active and here and posting and stuff, so let me know how it goes. And if I don't catch you again before tomorrow, then have a fantastic rest of the day and evening, and I look forward to catching you guys in the morning. So take care, team. Have a great day, and I look forward to catching you then. Good luck. See you later.